Okay, let's go. Arcane Research has put out a new research report on the state of Bitcoin mining. Disclosure, I do work for a Bitcoin mining company. This information we have shows that miners were dumping last month in the month of May. They dumped a huge amount of Bitcoin. I think in terms of Bitcoin, in terms of dollars, it was an all-time high. This is Bitcoin moving off of miners' wallets and balances from their personal treasuries into the open market and selling. So a ton of Bitcoin. I think at one point it was like over 8,000 Bitcoins moved by miners. We saw large public miners like Core Scientific dump Bitcoin on the open market. We saw Riot Blockchain, another big miner, dump Bitcoin on the open market. It also seems like smaller guys are also getting rid of their coins. The story here is last year, a lot of these miners were holding on to their Bitcoin. They're the HODL crowd, right? And that was a operations tactic because they thought Bitcoin could go to 100K or it could go even higher and they wanted to ride the wave. It was also sort of a marketing ploy, right? They wanted to be part of the HODL crowd. They didn't want to sell. They wanted to be diamond hands. And so they wanted to get some attention for both their stock and both for their company by hodling their Bitcoin. Well, it doesn't always work, right? You get to a certain point where Bitcoin drops, the cycle ends, and you've been holding on to these Bitcoins, which were at one point worth almost $70,000, and now they're worth about $20,000. And so you have to take a loss on your books, and your operations are still just as expensive as they were beforehand. So we saw a lot of miners decide to get rid of Bitcoin last month and dump into the open market. At this point, it's hard to say like how much of an impact this had on price because miners typically don't have that much Bitcoin. A lot of the Bitcoin has been mined already. About 19 million coins have already been mined of the 21 million total. So they're really only fighting over like 900 Bitcoin per day. In terms of volume trading for Bitcoin, that's not a ton. This does tell you about like the ecosystem for miners though. Like, are these miners healthy and where are we going from there? Zach, I'm gonna throw it up to you for your take.
They got to pay them bills, you know? I mean, this is an asset. They got to liquidate this asset, pay them bills. I mean, you said, you know, operationally, those expenses are still very much there. And, you know, this is probably an option of last resort for a lot of these publicly traded Bitcoin mining firms, but it's definitely something that you see happen during the bull markets in crypto, right? You got to cover those expenses, cover the operational expenses. And, you know, the benefit here with these public firms is that they have to disclose that as well. So we're seeing, you know, fresh data on this, you know, hit the market. So, yeah, I mean, that's a reality of the market. And I think it's going to be interesting to see which, you know, to go back to our Hester Purse story, which Bitcoin miners emerge as the stronger ones and which ones may have taken some strategic missteps during the bull cycle. Jen, I think I saw your hand though, so I'm going to throw it your way.
Yeah, so I have a question, Will. During Consensus, I interviewed your chief of product about at-home mining, right? And after that, I was thinking, like, given the market, at what point, if you're mining at home, is it more profitable to just turn off the miner? And so please tell me, what goes into that equation and what should you be considering given the current market conditions if you're mining at home?
Yeah, I'm actually pretty bearish on home mining. So home mining is basically you take your miner wherever you're going to get it. You're going to plug it into your wall socket. You don't really have to upgrade it, so that's a cost. Then you have to use your home energy. Home energy is like 10 cents an hour, really expensive. And if you're trying to get, you know, some Bitcoin at the end of the day, your cost of running the miner and then the mining rewards you're getting from Bitcoin are always battling against each other. And with Bitcoin being so low and it's being so hard to mine Bitcoin right now, you're probably breaking even at best and maybe not even making money right now. So I expect a lot of these home miners actually to just unplug and wait. I think a lot of home miners go in with that expectation though. They're like, hey, this is for fun. I want to be part of the network, much like people run a Bitcoin node or maybe they're a validator on another system. That's what they do, right? You're just doing it for fun. And you turn it off when you're not profitable, or maybe if you're really committed, you keep it online so then you still get Bitcoin at the end of the day. You're just basically buying it from the Bitcoin network instead of buying it from Cash App or wherever else you choose to buy it. So right now, market is tough definitely for mining. And I think that's why you're seeing these numbers, right? People are trying to help themselves out with their operations. How was that, Jen? Was that pretty good?
That was actually, yeah, that was great. Thank you.
Thank you. Thank you. Affirmation's helpful for me. I'll throw it up to Wendy.
One of the things, like, because I trade and I do technical analysis and whatnot, and one of the things that we don't take into account sometimes is Bitcoin mining economics. Like, when is the miner's capitulation area? Like, when will they actually be mining until they have to stop and turn their miners off because they're not in profit? And a lot of people don't understand that, and I said this on a Spaces earlier, is that I feel like we don't pay enough attention to what the Bitcoin miners are doing. And we kind of should, because it's almost like utilizing a Bloomberg terminal when you're analyzing different stocks or whatever it is that you're trading, because that's the data that we need to know, like key important areas of support. And if you pay attention to the miners' capitulation areas or the areas where they're not in profit, they generally line up with key support areas or resistance areas on the chart. So I just wanted to kind of throw that out there.